Hello traders and welcome back. In this video, we're going to be learning about one of my strategies, right? So we've spoken about strategies, we've spoken about our technical analysis, we've spoken about correlation, we've spoken about trading plans, we've spoken about a lot of things. So we are getting closer to the parts of the course where we actually trade the market live, okay, with a live account. That's with live money, with real money, not with demo like we've been doing here, but with live money. So I have two strategies. This video we'll look at the first one, and then in the second video we'll look at another one. Okay, now I have the first one, which is a moving average strategy. So I'm just going to open it here. Now this is the file for the strategy. Remember, we spoke about the rules for the strategy. Okay, your strategy should have analytical rules, should have entry rules, should have exit rules, it should have trade management rules. So I've just made an example with this strategy. Okay, so this file will be made available to you. In here you can see the analytical rules, what to look out for. You can see the entry rules. Okay, you can see the exit rules, you can see the trade management rules. So these are the things you should look out for. Okay, and I'm just going to make this like this. Okay, I'm just going to make it this so we can have an expanded version, or an expanded view rather. So the first strategy we will be looking at is the 50 simple moving average plus price strategy. So what this strategy tends to do is tends to give us entry signals based on the 50 simple moving average indicator, and also with price patterns. Okay, so price patterns like double tops, double bottoms, triple tops, triple bottoms, heads and shoulders, and other price patterns which we've looked at in this course. We tend to use these price patterns with the 50 simple moving average in order to find good entry signals. Okay, so I have the analytical rules here. Now the first one is to identify a price pattern. Okay, so mostly double top or double bottoms, or triple tops and triple bottom, and then heads and shoulders. So these are the most common ones, but many other patterns also can be used. Just try to identify a pattern. So that's the first thing, no matter the pattern. But the most commonly identifiable patterns for this strategy are the simple, are the double tops and heads and shoulders, right? So the second rule is to wait for the candles to close above, which is for buy, or below, which is for sell, the 50 simple moving average. So they have to close above or below the 50 simple moving average, and then we'll have to wait for the next candle to complete above the moving average for buy and below the moving average for sell, without the body of the candle touching the 50 simple moving average, right? And then analysis and execution of trades should be done on the same time frame. So we are not using multiple time frames for this, we are using just one time frame. Okay, so let us come to our trading view and just delete everything we have here. And just come on indicators, and then type in the moving average, MA for moving average. So we're going to add the moving average, and we're going to just click on it and make this 50. Remember, it's 50 simple moving average, right? So it's SMA method, simple moving average, and then 50, and then close, and OK. Okay, as it's adjusted, yeah. So this is what we have now. Remember, a strategy will not make you win all the time, but as far as it makes you win over a considerable amount of trades, okay, it's going to be good. So let's look at other rules for the strategy. You have the entry rules. You have to enter a buy or sell trade depending on the existing analysis, right? And then if you observe a clear trend in your direction and observe price retracing to find support on the 50 simple moving average, you then re-enter in that same direction after the candles find support on the 50 simple moving average and close above for buy or below for sell the 50 simple moving average. Okay, and then if below or above it with a candlestick trend continuation pattern. Okay, so if we want to re-enter, we have to look for a candlestick trend continuation pattern and also use the Fibonacci level. Okay, so this is more of a 50 simple moving average plus price pattern plus a kind of trend following strategy, right? So, So we can see at points like this, after we entered here, we can see that the market continued trending. So in cases like this, we might want to continue going with the trend. Okay, so these are the entry rules, and then the exit rules is to place your stop loss below, which is for buy, or above, which is for sell, the 50 simple moving average, and support and resistance levels respectively. So for buying, you have to look for support levels which are below the 50 simple moving average and then put your stop loss there, and the vice versa for selling. Then you have to use a take profit of 2 times your risk. Okay, you have to use a take profits of 2 times your risk. And then for trade management rules, you have to take stop loss to break even, okay, when 1R is reached in profit. So if your trade hits 1R, or when your trade hits 1R, you have to take your stop loss to break even. Okay, remember we spoke about break even, so that's what you have to do whenever your trade hits 1R in profit. Okay, so these are the rules for the strategy. And remember things like currency strength meter. Adding to these rules, not really adding to the technical analysis or adding indicators, okay? But you could add other things. Maybe I forgot to add them to the file, but other things like checking the strength of the currency, using the currency strength meter to help you even guide your entry better, or checking news. Okay, so you would like to avoid news events, okay, since you are not trading the news here, you might want to avoid news events. Okay, so just all the other things which we spoke about, things like correlation and so on and so forth, you have to check them also to help you even better. Okay, but these are the most important rules here. These are the basic rules. So I just added the indicator here on TradingView. So I'm just going to use let's see the 1 hour time frame. Okay, I'm just going to use the 1 hour time frame. I'm going to go back in time to see okay, how much back will we go? Okay, so let's just go back in time randomly to see how this strategy might play out. Okay, how this strategy might play out. Okay, let's start from here. So let's start from here. So as you can see, now prices crossed the 50 simple moving average, right? And then what other rule did we have? We have identify a price pattern. So let's see if we can identify a price pattern. That's of course below here. So the only price pattern I can identify here is maybe we could say this. Okay, kind of a channel. Remember we can now see what's happening here. So let's just maybe we came here and we saw this candle formed, right? So we could maybe see a channel is trying to form here. Okay, so remember I told you you can use other patterns also, but the double tops and bottoms and heads and shoulder patterns are usually the most effective, right? So I could say that the market is forming a wedge here, and then that's a rising wedge, right? So I've identified a pattern, and then the second rule is wait for candles to cross above the 50 simple moving average, and then prices crossed here. Okay, so I have 2 of my rules checked. If I had a checklist, it means I will be having 2 over maybe 4. Okay, and then we now wait for the next candle to complete above for buy or below for sell the 50 simple moving average. And sorry, why am I confused with this? And then that's what we have here. As you can see that this is, even though this is a sell candle, it completes above the 50 simple moving average. Okay, it completes above it. And then we have analyze and execution of trades should be done on the same time frame. Yeah, so it means we are good to go. We are good to enter a position. All right. So now we take this tool and then just enter a position. So it means we'll have entered a position at this point, right? So the next rule, which will be our entry rule, is enter a buy or sell position depending on the analysis. And for depending on our analysis, we are entering a buy position, right? And then if you observe a clear trend, okay, we've not come to this yet, but what about stop loss? Enter, okay, place stop loss below for buy or above the 50 simple moving average and support and resistance levels respectively. So take profit should be 2R, right? So it means our stop loss level should be somewhere around here. Okay, remember we'll try to risk as little as possible. So our stop loss level should be somewhere around here. Okay, or maybe here. Okay, remember we have a resistance level here. We have, okay, so just place our stop loss around here, and then for the risk to reward ratio, we can make this 2. Yeah, as you can see, we have 2 risk to reward ratio, right? Now what can you see? We can see that our market bought and closed us here in profit, so we made 2R, right? And we can even see that the market even bought way more than 2R. It even bought up to 3.25R. So another way of trade management, like I said, is trailing stops, right? So what if I saw the market approaching my take profit aggressively, and I kind of shifted my take profit here? Sorry about that. Kind of shifted my take profit upwards, and then trailed my trade. Okay, that's also possible. I activate the trailing stop. Remember about our trailing stops when we looked at MT4, right? So I activate my trailing stop, give it a distance of, let's say, 15 pips, okay, and then just see it go through. And then instead of that, I was able to make 3.2R instead of making 2R. Okay, so I've tried to increase my profits, right? I've tried to increase my profits with trade management. Okay, so if you do not understand so much about this, if you do not understand how to keep yourself calm and do the trailing, you can just stick to the 2R. Okay, you can just stick to the 2R. Okay, so you don't have to kind of worry yourself. So you can just stick to the 2R. Just stick to the 2R, or if you like, you can trail it properly. Okay, so that's way we have one winning trade here. And then going forward, you have the market ranging, and then it crossed here, but we didn't have an entry signal. Now it crossed here, and we had an entry signal here, right? So we took an entry. So after this candle, let's say we took an entry here. Then our stop loss level will have been somewhere around here, and our take profit will have been somewhere around here, 2R, right? Let's see, somewhere around here. Now we can see that after we entered, the market came and it didn't give us 1R. If it had given us 1R, we will have moved our entry position to break even, but it didn't give us. So it now took us up here and then took us out. So we made a loss here because the market got this manipulation, right? So we made a loss, even though it glided back to our position, but we made a loss here, no problem. So we have one losing trade, and then we now had an entry position here. Okay, we had an entry position here. So imagine we entered here. Imagine after this we have this candle, and then imagine we entered here. Imagine we entered here and then made our stop loss here, right above here, and then our take profits 2R, right? Our take profits will have been here. Okay, our take profit will have been here. So the market managed to come and then almost took us out. And okay, and you see that because of this, we would have taken our stop loss to break even, right? Because it made 1 hour here. So it made 1 hour and we took our stop loss to break even. So our entry price is now, our stop loss is now at our entry price. So the market came, almost hit our take profit. Okay. It almost hit our take profit, but it didn't hit it. So, okay, what if at a point like this, we started trailing the trade like we did before? Okay. What if we started trailing it like we did with the trailing stop here? Okay. We will have either come out in a bit of profit, maybe 1.5R or 1.2R or let's just say 1.5R, or we will have come out in break even. So it means we wouldn't have lost the trade and will have still been in profit because we milked the market very properly here, right? So that's one other thing. So so this was a trade which we entered, and we either came out in break even or we made a little profit. So now, what else? Did we have another one here? Yeah, we had another one here, but unfortunately, we lost that one. So like I said before, guys, in Forex, you won't always win. You won't always win. And we had our stop loss maybe around here, so we lost this. Okay? You won't always win in Forex. That's the truth. But once you can be consistent, you keep making money on the long run, in the long run. So you can see that even with this one, even though we lost, I'm very sure we still haven't exhausted the profit we made from this trade and probably this trade. You see, we lost, and we now got an entry signal here. Let me just delete this guy. Okay, so we now got an entry signal here to sell. So let's assume we got it here, and then the market started rallying, and then we just sold here, right? And then we sold here, we put our stop loss here, and our take profits to our 2R, right? Yeah. Now this is 2R. So as you can see, the market came and hit our take profit, and we made another profit here. What if we trailed it? What if we trailed it? We'll have made even more, but we made 2R. That's the most important thing. So now we have the other rule that says if we observe a clear trend, and based on what I can observe here, I think I saw a trend. I think I can see a trend. Okay, so as you can see here, it came and tested this and gave us another signal here to enter. So we'll have entered here to sell here, but we will have made we won't have made a loss really, because we'll have put our stop loss here, and the market even actually made 1R. It made 1R because it even made more than 1R. So we will have taken our our stop loss to break even. So we didn't lose this trade, we were break even. So as you can see, there is only one trade out of all these trades. We only lost one trade clean. We only lost one trade clean. All the others, we were either in break even or we were in profit. So you can see that as far as you follow your strategy, you can see that you consistently be making money. So the market now came and broke here and give us a signal here, right? Give us a signal here to enter for a buy. And what happened? Let me just delete you, sorry. Delete you. And what happened? We came and, okay, we crossed here and got a signal here for a buy. So let's say we entered here for a buy, made our stop loss somewhere here. We made our stop loss here at this low level, and our take profit 2R, right? So what do we have? Oh, sorry, what happened? Sorry, my network just got. I'm gonna connect it to my phone, okay, for internet. So a call came in. That's why my network just went off, but I just rejected it, so we can continue with the recording, right? Yeah. So we have a stop loss here. We have our take profit 2R, and as you can see, the market hit our take profit, and we made another valid win, right? So we made another win, and then we have the market cross here. We had the cross here, and we had an entry signal here. Yeah, but some of these signals, you have to kind of compare them. If the risk will be too much, remember we spoke about risk avoidance. Okay, sometimes the risk might be too much. So you might just want to wait to see if the market will retrace. Sorry, the call is coming again. I just rejected it. You can just see if the risk is too much, you just avoid the trade and then wait to see if it's going to retrace. In this point, it retraced, found some support on the 50 moving average, and then continued back. So this will have been a better place to enter for a sell. But anyways, let's just assume we still entered the way we got the signal and aimed for 2R, right? Now, this will have been 2R, and as you can see, the market just kept flowing in our direction and even made more than 2R. It made up to 3R. So imagine you came out or trailed the trade. Guys, you'll be making a hell of money. So we can see that for this other one, we observe a trend. Then it came here, and you can see it gave us an evening star pattern, right? It gave us an evening star pattern. Remember, that's our rule. If we observe a trend and then it tested the 50 simple moving average and closed below it in this case, which is a sell, and then it was in confluence with our Fibonacci level, and we had the price continuation pattern, okay, which is valid in this case. As you can see, in this case, we had an evening star. Remember, this is an evening star pattern, right? Which is telling us that the trend will either change, this temporal trend will either change to the downside, or we'll have a continuation to the upside, to the downside, right? So imagine we saw this and still entered for a sell. We'll have entered here and have our take profits kind of above here like this. And what happened, guys? We hit our 2R and made even more. As you can see, we've just lost just one trade. Out of all these trades, we just lost one trade. You can see how powerful this strategy is. Just this simple strategy, guys. Just this simple strategy. Your success is just your ability to follow it. Okay, that's your success. Let me just delete this. Okay, so it came here, it tested here again, and let's assume we entered here again, because this was an inside bar, I guess. This was an inside bar, or kind of a bearish engulfing. So let's assume we entered here for a sell. We'll have actually made a loss, but hey, losses are part of the game, right? But let's assume we just made it like this, and yeah, aimed at 2R. The market made 1R. We wouldn't have still lost the trade, guys. We will have still just, after this 1R, maybe take our trade back to break even. And here it is. We didn't lose the trade, but we finished at break even. So we saw another signal here to sell. We saw another signal here to sell. After it finished, we sold, and stop loss, take profits, and guess what? We made our 2R and even more. So as you can see, guys, all of these have been winning trades so far. And this strategy is very powerful. It's very powerful, and you can keep making money, Of course, there are places where the strategy won't make you as much money, okay? But overall, this is a perfect strategy for you as a beginner. So you can use this and keep making money. Let's look at the money we will have made all this while. Okay, let me just look at the amount of pips we'll have bagged. In this case, we'll have bagged where is it? Sorry. Okay, in this case, we'll have bagged this 1 hour. Wow, we'll have bagged 307 pips in this move alone. Okay, we'll have bagged 307 pips. In this move alone, I think we won this move, right? Yeah, we won this move. In this move alone, we'll have bagged 386 pips on gold. So as you can see, this strategy works very well on gold too. So guys, I don't know if you've seen what I'm seeing, but of course, this is the light. So you just have to stick to your strategy and keep on doing what you do best. You just keep on following the strategy and keep on following it, and consistently you'll keep making money. Sometimes you might not make as much. That's just the reality. That's how things are in Forex. but you make money overall. You will be in money. You'll be in money. Imagine we took this trade. We'll have used here for stop loss and our take profit 2R. You can see it hit our take profit. So just keep, in fact, you don't even need to aim more than 2R, guys. You don't need to be greedy. You don't need to be greedy. Just aim at 2R. Aim at 2R. It will always hit your TP. It will most always hit your TP. Just aim at 2R and then do your break even, right? Do your break even, aim at 2R, and guys, you will always be making money. I promise you. Always be making money. Yeah. So we're going to be trading with these strategies. I don't know if I'm going to use this particular one for my live trading, because I haven't used this for a while, trading live. But even if I do, you'll still be making money, right? Yeah, so just go through the strategy over and over again to get acquainted with it. And then, of course, it should align with our trading plan, right? Remember, I shared you the trading plan. So it should align with our trading plan, right? And before you know it, you'll be making money before you know it. So that's it for this video, guys. That's it for this video. And hope to see you in the next one. The next one, we'll be learning about the next strategy, which is more of a price action strategy. We'll be trading market structure. Won't be using any indicator. We'll just be learning about the basics, or the basic ways of the market structure, okay, of price action, of how price works and how the market trends and so on and so forth. So that's what we'll be using in the next strategy. Okay, so hope to see you in the next strategy, in the next video. Yeah, so see you there. Bye.